I've gone from being unofficially LNS Rock to officially LNS Rock. And thank you for attending our first Next Gen Nexus Family Business Center webinar program. We've been talking about family business centers for the last 7 seconds. And for those of you who aren't familiar with them, they are the leading supporters of family businesses in their local market. They're about education, number one, and they're typically associated with a college or university. Their missions include helping family businesses with the success of the business. Centers also assist with the soft side of succession. And they're also major cheerleaders as family businesses celebrate the importance and the legacy in their local markets. We have 7 partners. Some of them have really long names, so I'm not going to go through them. But if you want to know more about family business centers, you can come on our website. You can click to the partners. You can see if there's a center in your area. And you should try to find out about family business centers. They're an incredible resource. And we should all be grateful to have them. So what about Next Gen Nexus? We're building a global Next Gen community for business, travel, moral support, and to celebrate the wonderment and the strangeness of being and growing up in a family business. Next Gen Nexus, we're not educators. We have incredible partners who can really help you work on anything you need about your family business. We're in the edutainment building. We want to create great programming that's especially relevant to family business next gens. Before we start with Alex and his tremendous story, I want to introduce Jill Hoffmans from Conway Center for Family Business, who's going to share our next program with you.
So yeah, as Alan mentioned, Next Gen Nexus does edutainment. And he mentioned to me recently, we should do something around the Kentucky Derby. Wouldn't that be cool? Too bad we don't know anybody who is affiliated. And I said, well, my dad's a thoroughbred horse trainer on the Southern California circuit. So my dad's Dave Hoffmans. He's been a trainer since, well, he was a groom when I was born, but then he's been a trainer for 50 years. So I said, oh, well, what are you thinking of? And so we started talking about the family business aspect of thoroughbred horse racing. So I grew up on the backside, Santa Anita, Hollywood Park, and Del Mar. I would go to work with my dad. My grandpa worked with him. My uncle did a couple stints coming in and out as a groom. Eventually, my brother worked for him as an assistant trainer for 20 years. My sister worked in the racing office. My brother married a woman who was the assistant racing secretary. And that's not a unique story at any racetrack. Those family businesses are embedded in the fabric of what goes on the backstretch, and then also on the front side, on the racing side. So weaving family business and entertainment and horse racing and all of that, we just thought doing another webinar with possibly one of the leading trainers right now at Santa Anita. He and his son work together. We're trying to get them to join us. And then also the superintendent of stalls, which is a very important and political job at the racetrack. He and his daughter work together at the track. So we're going to come together right before the Derby and have a discussion about horse racing and the excitement and importance of the Derby, but also those family business ties and how they weave through that sport entertainment industry. So look for a date on that coming up. It'll be in late April at some point, and we'll have more info as we get closer. So it'll be fun.
Thanks, Jill. That's great. And probably most important, we're going to get some inside betting tips for the Derby. And the only way you're going to get those tips if you join us for our next webinar. And as Jill said, we'll have that information in a few days for you. Now to the star of the show. We believe that family businesses, speaking of stars, are the rock stars of their local community. people know the family business is their family. And even in star-studded Los Angeles, Canter's Deli is as big as it gets. Everyone knows Canter's Deli. And for that reason, instead of rumbling on about it, I'm honored to introduce G4 Alex Canter, who's going to talk about Canters, and even more exciting, or equally exciting, how he helped change the nature of to-go ordering. So thank you.
Thank you guys. Happy to be here, and what a beautiful introduction. And I also did not know all of that history, Jill, about horse racing. My great-grandfather, who was the original founder of Canters, used to own horses and run them at Hollywood Park in Santa Anita. So I'm sure there were some connections back in the day as well.
Hopefully he didn't get hit by any M&Ms that Walter Matthau and I would be throwing all around the grandstand.
I couldn't tell you. It was long before I was a thought. So
Right.
well, thank you so much for having me. I'm gonna go ahead and share my screen and get that going for you all. Nice to meet everyone. Can everyone see my screen okay? Yeah? Alan, thumbs up? Sweet. All right. Well, I am excited to introduce myself and my story here. I'm Alex Canter, as Alan mentioned, fourth generation of Canter's Deli, which is one of the oldest and long-standing restaurants in LA. But I actually, after growing up in the family business, and I'll get into all this in a second, I ran away and started my own technology company from what I learned from my foundation of growing up and working in the family business. And we went on to raise actually over $150 million in venture funding. And it was a very, very crazy ride and journey. Learned a lot of incredible lessons and met incredible people, got to travel to incredible places. And it was all, based off of my upbringing and being able to jump into a family business at an early age. So I'll jump in and get started with the backstory here. So this is Canter's. For those of you in LA, you may have seen it on Fairfax. It's like I mentioned, one of the oldest and largest restaurants in Los Angeles. Started in 1931, and it is also one of the first 24-hour businesses in LA. So it's been 24 hours since the 1950s, and because of that, it's become a spot that many celebrities and all sorts of walks of life have frequented over the years. It was sort of the hippie culture hub of the 60s. It was very political in the 70s. And we've actually had 3 standing presidents come into Canter's over the years, including one while I was there. I got to wait on Obama when he came into the restaurant. It was really, really awesome when he came in, super friendly, and took pictures with the family and a lot of the staff members. But Canter's is a very, very crazy place to grow up in. I used to run around the restaurant as a kid. I waited tables starting at 12 years old, and I worked my way up through various positions and eventually became in charge of all things new, just like my father and my grandfather had before me. I'll start with my father, actually. My grandfather worked in the restaurant for about 65 years before he passed. And up until the year he passed, he was in there every morning cutting fruit still. Even in his late 70s and early 80s, he was still at the restaurant many days a week. My father, right out of high school, jumped into the family business and has been there for over 40 years. He has poured his blood, sweat, and tears into this restaurant. His sister is involved, his cousins are involved. But he is there 7 days a week, sometimes working 12, 14-hour days, sometimes working through the night if there's issues happening or things that need to be fixed. And he has been there 7 days a week for his entire life. He is there all the time. And I had the unique upbringing of being able to be exposed to this business at a very young age. And I would run around to various restaurant conferences like a kid in a candy shop, signing up for all new technology and different ways to expand and grow the family business through marketing, through digital ordering, through catering. I renovated the bar. I redid the menu from scratch, adding lots of new items, removing certain items, adapting it for the modern consumer with gluten-free bagels or vegetarian matzo ball soup or plant-based corned beef, which is a newer addition to the menu. But we're trying to gear it up and get it ready for the next 100 years, which is kind of a crazy thing to think about. But there was always this feeling growing up that I was next in line and that the fourth generation would eventually come in. And that was at least the plan, for me to start. I was working at the restaurant during summers and in between, college summer breaks, and right after college, I jumped right in. As I mentioned before, I went to University of Wisconsin for 4 years. Both my parents hadn't gone to college, so it was different for me to go away. But I thought it would be a good experience for me to go get some education and come back and apply it into the family business, which at first I started to do, but then I realized that there were opportunities to make restaurants run better. And I had signed up for all the delivery apps for Canters like DoorDash and UberEATS and Postmates and GrubHub. And we ended up signing up for 14 different online ordering services. And delivery grew to become over 30% of our revenue for our restaurant, which equated to millions of dollars a year, just in third-party delivery sales, which was an amazing and unexpected, channel of growth for us. We were not expecting it to be that impactful for us. But the problem is each one of those online ordering systems were designed independently. And so each one of those systems had their own hardware to manage. And I'll show you just a little glimpse of what that looked like here. So we had 9 tablets, 2 laptops, and a fax machine to manage all of those incoming orders. And while the results were great from a sales perspective, everyone in the kitchen wanted to kill me because, it was chaos with all these systems to manage and all these tablets that had their own menus and their own reporting systems, their own payout dates and structures. So it was a very complicated situation to juggle. And so in 2017, I put together a team of people that I had met in Los Angeles through the tech community. And we set out on a mission to make a better way for restaurants to manage all of these incoming ordering streams from all these various platforms. And we started to think about, zooming out and reimagining in a perfect world. If we can redesign how restaurants receive orders, what would that look like? What would it feel like? What would be the desired way to do that? And in 2017, we launched a software company called Ordermark. So Ordermark was birthed out of the back of Canter's. We actually, spent the first few months building software, and I'm not an engineer, but we had recruited some engineers to be a part of our team. But we wanted to build one system, which was a tablet and printer, to manage all of these incoming ordering streams and make it really easy for restaurants to just put their heads down and make food, which is what they do best, and not think about all of the hardware and craziness associated with managing all this stuff. So we ended up partnering with all these different companies. We actually integrated with over 40 different online ordering services, which were starting to emerge, in that period that we were launching. And there was no other system like this. I was talking to other restaurants around the Fairfax area or friends that I had grown up with in the restaurant industry, asking them, how are you managing all these different delivery apps? And it was complete chaos at the time. So we built this software and this system. We launched it and immediately found product market fit. We started reaching out to various restaurants in LA, telling them that we built this, this all-encompassing way to manage all this. And almost every restaurant that we called immediately signed up. The business model was charging them $99 a month per location, which is a very minimal fee to be able to organize all this chaos and enlist in all of these different ordering streams. So It was really awesome to build something that, solve a problem that we were experiencing firsthand in the family business. And I would not have had, an understanding of how to do this if it wasn't for growing up and experiencing this problem firsthand, and wanting to create a better way for it. So
Hey,
we,
Alex, how did you
yeah,
fund how did you fund that kind of initial development?
yeah. So we, when we launched in 2017, we had no money in the bank, no partnerships with any of these delivery apps. We basically started a bootstrap from scrappy startup, um, like from scratch startup that that set on a mission to eventually go raise money. And as we started talking to various angel investors around the Los Angeles community, we very quickly were able to attract some awesome people around the table, to help basically fuel the beginning of this business. We raised an initial pre-seed round of about $750,000 from various angel investors through Los Angeles. And I had never fundraised before, but some of my co-founders had some experience with it. And after running around LA trying to raise some money, we were able to scrap that together. And then very quickly after that, we ended up raising a $2 million seed round, led by some of the most prominent VC investors in Los Angeles, including 10110, Act One Ventures, and Mucker Capital, all LA-based venture capital groups that we met through introductions or through going to various tech events and asking everyone that we knew for introductions to these people. And we were very fortunate and lucky to be able to quickly bring in some capital to fuel the growth of this company. And then we were able to start actually paying people and hiring more people. And within a very short amount of time, we had a very quick ramp up. And within the first 3 years, we actually scaled to partner with over 5,000 restaurants, hundreds of team members. This was actually a photo from our holiday party back in 2019. So about 2.5, 3 years after we started, you can just get a flavor of how big this thing was growing, and the velocity. The product market fit was something that we hit on right away. This was an immediate problem that we were solving that was being felt by a lot of restaurants as they were shifting to focus on brick and mortar business to being online and selling through these various platforms. So we tried to keep it fun. This is a roller disco holiday party. And it was fun to be able to recruit and attract amazing talent in Los Angeles to be able to build this thing. And then 2020 comes around, and all of a sudden, the demand for our product exploded, I would say. We went from signing up 300 restaurants a month, which we thought was an incredible amount of restaurants to be able to sign up in a single month, to March of 2020, we signed up over 1,000 locations. April of 2020, we signed up 900 locations. So all of a sudden, all these restaurants had to shut down their dining rooms and had to figure out creative ways to make up for that lost order volume from their from no foot traffic coming into their doors anymore. So all of these mom and pop restaurants and many chains started to move online and had to be on all these different online ordering services. So order marks started to explode, and through that we actually found an even greater opportunity to help restaurants. Now that we had built this system that brought all of the orders together in one tablet and one printer in their kitchen, the next step was thinking, how do we generate more orders for these restaurants? And we did that through something that we launched at the end of 2019, but really it started to explode in 2020 during the pandemic, called NextBite. So NextBite, I would call chapter 2 of the order mark journey. Some of you might have heard of ghost kitchens or virtual kitchens, but this was kind of the evolution of what we started to build. So let me explain what a virtual restaurant is first, and then I can get into all of this. So a virtual restaurant is a brand that only exists online. Sometimes you might notice this when you're scrolling through UberEATS or through DoorDash if you use those apps or platforms, but you might find a restaurant that you've never heard of that if you went to Google, you would not find an address for it. And that's because it's a restaurant that only exists online. And what we realized was one of the ways that we can help drive extra orders into these kitchens was to design new brands from scratch and partner with our existing restaurants to train them on how to make food for a second concept. So I'll give you a quick story of what we did at Canter's as a test for this. So I asked my dad, if we can sell more of anything on the menu, what would it be? And his answer was grilled cheese sandwiches, because they cost less than $1 to make, and we charge about $10 for them. So the margins are great. They're very easy to produce. We never run out of bread or cheese. And if someone came in and ordered 20 grilled cheese sandwiches, we would be happy. So we created a brand online called Grilled Cheese Heaven. And I basically created a menu, I spun up a logo, and I put it on the delivery apps, DoorDash, Postmates, GrubHub. And I put the pickup address as 419 North Fairfax, which is Canter's Deli. And so basically we launched a new brand overnight, focused just on selling grilled cheese sandwiches, and delivery drivers go and pick up the food from Canter's. It's being made on the same kitchen that they're cranking out Reubens or matzo ball soup and everything else, but they're basically putting a different sticker on the bag so that it's being sent out for delivery. And most people who are ordering it don't even realize that it's coming out of the same kitchen as Canter's. It's like a totally new concept. And this was kind of the thesis and basis of NextBite. So we actually built an entire portfolio of delivery-only brands. So I mentioned grilled cheese sandwiches. We created a whole brand around grilled cheese sandwiches. We had a concept called Outlaw Burger. We did a brand called Firebelly Wings. And what we were doing is with NextBite, we were going back to our thousands of order mark restaurants saying, now that you have all of your orders coming through this one system in your kitchen, do you want to take on a second brand or a third brand or a fifth brand out of your same kitchen using your same staff, your same overhead? The rent is fixed, the lights are already on, the staff is already in the kitchen, whether you're cooking food for one brand or multiple brands. So why not cook food for another brand or two and get an extra 5, 10, 15 orders a day? And some of these restaurants that we were doing this with, especially in 2020, sometimes we were driving an extra $10,000 or even $50,000 worth of orders into their kitchen a month, which was a huge deal for a mom and pop restaurant to be able to get an extra $50,000 a month from these virtual brands. Some of these brands were performing better online than the restaurant's actual brand, because we were building brands that were designed for delivery. Sometimes there might be a fine dining restaurant where they're not going to get a lot of orders on delivery, but if they take on our wing brand or our taco brand or a burger brand, they can start cranking out food out of their underutilized kitchen. So this was sort of like version 2.0 of Ordermark, and it became the most important thing that we could be doing for restaurants during the pandemic, was driving incremental orders into their underutilized kitchen. So just to give you an example, one of the more fun brands that we launched, this launched towards the end of 2020. We partnered with Wiz Khalifa, who's a very famous rapper. He's got some big songs and 40 million Instagram followers and a big audience. So we created a concept in collaboration with Wiz Khalifa and his team called Hotbox, which is like a play on a stoner brand, if you will. And we wanted to imagine, what would people ordering delivery, love to order, especially late night. And we basically created like a munchie menu where there's cheeseburgers that have hot Cheeto dust on them, or mac and cheese with chicken tenders mashed into them, or just picture the most gluttonous stoner food you can ever imagine. That was the menu that we created for Wiz Khalifa. And then we went around and partnered with mom and pop restaurants to enable them to basically be a fulfillment partner for this concept and to sell this food out of their same kitchen. And we got a lot of buzz from that. So we were covered by a lot of the modern publications. There were all these news articles coming out, like Wiz Khalifa now has this stoner menu that you can order from on delivery apps like DoorDash and Postmates. And most consumers, again, didn't realize this, but it was coming from Joe's Sports Bar and Grill, or coming from, your local cafe that was basically following the instructions that we gave to them. So we gave the restaurant, a specific list of ingredients that they had to carry. We gave them the stickers to put on the bag, and we told them, make it to these specs, follow our instructions, put it in this box that we've created, and a DoorDash driver will just come pick it up and deliver it. And we had a restaurant in Pittsburgh, which is Wiz Khalifa's hometown, that was doing over 100 online orders a day just for this concept, which blew their own concept out of the water. They even asked us, like, do we even need to keep our own restaurant running, or can we just do the Hot Box by Wiz brand? It was so successful for them. And this was a really fun, new idea. No one had ever really been doing celebrity virtual brands before this. It was like, we partnered with all the major talent agencies like UTA, WME, CAA, to basically create a new platform for their roster of talent to work with us and design concepts and brands. And we ended up launching a handful of celebrity brands that had various levels of success. But because of Nextbite and because of this trajectory that we were on, we ended up raising a huge round in 2020 at the end of that year, led by SoftBank, which is the largest investment fund in the world. SoftBank has backed some of the biggest companies. For those of you in the tech world, you're probably familiar with them, but even if not, SoftBank was the main investors behind companies like Airbnb and Uber and DoorDash. Notoriously, WeWork was a big investment from SoftBank that didn't end up going so well. But to be able to attract SoftBank was absolutely an incredible experience for me as a first-time entrepreneur and first run as CEO of a tech company, to be able to go on this journey and attract some of the best investment groups in the world. Foundry Group is a very famous funding group that created Brad Feld created Techstars, which is a very famous accelerator program. But we had a really amazing run attracting some of the best investors, all the way from the seed round, which was all done locally by LA investment groups, to within 3 years being able to raise this kind of capital from SoftBank. And so we raised over $150 million in the first 3.5 years, which was we really hit lightning in a bottle, and it was a really, really incredible ride. And after we raised that funding from SoftBank, we ended up really going for it, hiring hundreds of people the following year, and really doubled down on the Nextbite side of the business. Ordermark was sort of the foundation and the underlying tech stack, but Nextbite is really where we were able to help restaurants the most. And the business model for Nextbite was really fascinating and interesting. Unfortunately, though, as the restaurants started to reopen again and foot traffic came back in, the demand for virtual brands and these new concepts that were only available for delivery and online started to decline and got very oversaturated and crowded, as all these restaurants started, moving on to these delivery apps and realizing that they could actually do some of their own virtual brands as well. And the order volume for our brands continued to decline as the restaurants reopened again. And so through 2021 and 2022, some of our peak COVID assumptions didn't hold the way that we thought that they would. And we ran into some challenges, and like many tech companies, we had to go through rounds of layoffs and all these really devastating things that we had to do, which obviously was the worst part of the journey. I would say, it was a lot of fun when we were in full growth mode, but I also I learned a lot on the way up, but I learned a hell of a lot more on the way down as we were, having to make these really tough decisions. And I had to, navigate very difficult board meetings and challenging situations that I never thought I'd be able to get exposed to. Yeah, I'll just show this slide real quick. One of the ways that we were able to attract all of this funding, just to rewind a little bit, is by having a huge vision for what we were trying to accomplish. So the same way that Uber was the largest transportation company in the world that doesn't own any cars, and Airbnb is the largest hotel booking platform that doesn't own any real estate. Our vision for NextBite was to be the largest restaurant group in the world that didn't own any restaurants or cook any food. So we were launching these brands and spreading them to hundreds or thousands of locations. But we weren't actually competing with restaurants. We weren't opening our own kitchens or cooking food. We were basically enabling restaurants to sell more food out of their existing kitchen, which was a little bit of a new approach and something that no one else was doing at the time when we launched it. And of course, once we started to gain some success and the investor attention, many people started to enter that space, but it is very difficult to be able to train all these restaurants to produce consistent food and all these crazy scaling challenges. But we had lots of smart people helping us figure all that stuff out. And in 2023, halfway through last year, even though the timing was not ideal as we were, as we were starting to go through these challenges with layoffs and everything else that was going on, we ended up selling the business. We actually split up OrderMark and NextBite into two pieces. We sold OrderMark to a company in India that was doing aggregation technology and for over 40,000 restaurants internationally. They were about to enter into the US market, so it made sense for them to buy the OrderMark business, and we ended up splitting off the virtual restaurant brand under the NextBite umbrella and selling it to Sam Nazarian, who famously is an amazing entrepreneur here in LA who started SBE Hospitality. Also comes from a lineage of family business, and it was a little bit of a bittersweet and not the ending that we were hoping for in a lot of ways. I think for me, I had a lot more excitement to continue to grow, but I think just the timing of the way that the markets changed and for those of you in the tech world, I think a lot of you might know that a lot of the valuation multiples evolved over time, and the ability to access capital became harder and more challenging coming out of the pandemic. And so, with limited options of how to continue to raise and bring in more capital, we basically had to explore other options, and we ended up selling the business halfway through last year. Some people retained on and are continuing to operate on the NextBite side and on the OrderMark side, and I have taken a step back from the business now. I've had some nice free time over the last few months to think about what I want to do next. And obviously there's a lot of pressure about what's going to happen to Canters and the family business. But for me, I learned so much through this experience that it's hard for me to not think about building something new again and starting another company or getting back into tech, because that's something that I learned a lot through this journey. And I think ultimately, there were a lot of experiences and relationships and things that I got to go through, and it would be a waste for me to not continue to apply these learnings and do something all over again, starting either this year or next year. And I think I've got some fire left in me to go do it all over again. And it was a really, really incredible run, and there's no way I would have been prepared for half of the things I dealt with if I didn't grow up in a family business where I was being exposed to crazy situations at a very young age. And even though I started this company when I was 24 years old, which seems like a very young age to found a tech company, I felt like I already had 10 years of work experience because I was already in the family business for so long, and dealing with a lot of complicated situations and implementing new systems and learning about leadership and learning from all the people around me, my dad and other people that I was working with in the family business. So I think I was very well suited to jump into this, and now I'm starting to think about what's next. And I think there's a lot of opportunities in my head of what could be exciting, and already already starting to plan for what that might look like. And of course, the family business is still running and going strong, and my dad is there 7 days a week still. he's always operating in this nonstop. I'm here to support this business way, and I think we're thinking about what do the next 100 years look like for the family business. But that's my story. So thank you all for listening, and I'd love to open it up to some questions and chat. I wasn't able to look at any of that stuff earlier, but if you guys do have any questions or comments or anything, please feel free to put it here in the chat or the Q&A, and I'll try to answer as many as I can.
Alex, can you see there are a
I've
couple of
seen
questions in the Q&A? Can you see those?
it. I can now. Hold on, give me 1 second here. So I see the chat now.
The first one is, have you had any difficulties paying back the investments back?
Yes, let me address that one first. So when you're doing a startup, a lot of investors, especially VCs and people who are experienced with investing in technology companies, they are investing in out of typically a fund, which is going to invest in lots of different companies. Could be dozens, it could be up to 50 investments out of a single fund, and they're taking a portfolio approach, hoping to back some winners that will help pay for the entire fund. And I think we were on that trajectory at one point, and some of our early investors did pretty well, and some of the later investors unfortunately didn't do as well. And I think for a lot of them, it's one of many companies that are not going to make it. And I think the expectation is most startups fail, and there's always going to be one or two that end up being a grand slam that ends up paying for the fund. And while we were hoping to be that for a lot of our investors, I think in the end, we weren't able to achieve that for them, and they're able to move on and try to double down on the ones that are continuing forward. And I think at the various stages, there's some people that are always going to do better than others based on what valuation they came in at. And we had over 27 investment groups come into the cap table from the time that we started to the time that we ended. So various stages of that journey resulted in different outcomes. And unfortunately, we couldn't continue the ride and eventually ring a bell or go public or have some massive exit. But that's always the hope, and what I'm hopefully trying to achieve in the next one. So I see a question: what is next for Canters? Any family members looking to join or take that over? So I have a younger sister. She runs the Instagram for Canters. I have some cousins who are not as involved in the restaurant as maybe they wanted to be at one point, but that's a big question that is always on my mind. And I think, we have some directions and ideas of where we can go with it. When I was younger, I had some interest in expanding and opening more locations, and we've done some testing with that. But right now we've dialed back to just, focusing on the main location and making sure that works and is sustainable. And it's a big question that I still think needs to be figured out, but for another day. And then if you could do it all over again, what are 2 to 3 things that you would do differently? It's a great question. I think one of the things that I learned through the experience was just how important it is to keep a pulse on financials and numbers and unit economics and KPIs. And I think starting this business, I didn't know a lot about that stuff. I didn't go to school for I studied entrepreneurship and economics at Wisconsin, but I wasn't the person who was building financial models or any of that stuff. And I had to learn a lot of that stuff from scratch by jumping into the deep end and understanding all this stuff. And I think that's something that I'd want to bring to the forefront sooner than later. And I think also at the time that we started Ordermark, the goal was to focus on top line growth and growing at all costs, and then the world sort of change where there was this huge focus on a path to profitability and fundamentals and economics, and we were already on a different path, so it was very hard for us to adjust. The year that Uber went public, for example, they lost $3 billion that year, and that was the kind of behavior that was being rewarded in some ways. So for us, it was it was how do we grow and build a huge business and then figure out how to make it extremely profitable at that point. And we were years away from that. And yeah, just I think I learned a lot about recruiting and what types of people I would work with again. And I think there's just a lot of lessons from the whole experience. But I think what the most important advice I would give to anyone who's interested in starting a company is just to start. Stop thinking about it and just start doing it. Because even if it doesn't work out or it doesn't work, you're going to learn so much through that process, and that's an important stepping stone and building block to continue your entrepreneurial journey. And I really am inspired by a lot of entrepreneurs that just kind of take that leap of faith, and maybe they don't have it all figured out, but they jump in and try to figure it out. And some people make it work, some people don't, but either way, you're going to learn so much through that process. So. How important was the management of people versus the management of the business in creating a corporate culture? Corporate culture is something that I was very passionate about. I think I probably leaned a little bit too much into the management of people versus management of the business. I cared about what people's work experience was like, and I was less harsh on, making sure everyone was hitting their goals and performance numbers. And I hired a lot of people around me to help with that stuff. But I think, if I were to do it all again, I would focus a little bit more on the management of the business versus the management of people. And I think they're both equally important. I think I was just skewed a little bit too much on the people side. And then obligated to pay back monies funded. There's no obligation for I think a lot of VCs know when they make an investment that if the company's not successful, they're going to take a hit, and that's part of the game. So our goal was to try to get as much money back as we can for investors, but there's no obligation to pay back the monies funded. I don't have $150 million to be able to help make sure everyone gets paid back the way that we wanted to. And our goal was to build $1 billion business and return everyone, as much return as we could on capital. But I think that's part of the give and take of starting a company. And I think for whatever I do on my next journey, I think focusing a little bit more on like a business that has strong fundamentals from day one, and maybe grows a little bit slower and more sustainably than the big swing that we were trying to take with Ordermark, where it was like, if we build it, they will come, and just over hiring, assuming that things are all going to work out the way that we want them to. And I think I think there's a ton of lessons that we're learning through this experience, and yeah.
We have a couple questions from the Q&A. You touched on this briefly, but what was the revenue model for Ordermark and NextBite?
Yes, so Ordermark, it was like a monthly SaaS subscription fee, which means software as a service. We were charging a $99 a month fee to restaurants to be able to use our system. So when we had thousands of restaurants paying us that was a really nice business model with great margins. But we would have needed tens of thousands of restaurants to be able to build a huge multi-billion-dollar business. And that's why we started to pivot into the focus being NextBite, which was a very different business model. It was a rev share. So we would pay the restaurants 55% of the gross sales. The delivery apps like DoorDash, UberEATS, GrubHub, they would take about 25% of the gross sales, and then NextBite was keeping about 20% of the gross sales. So if we were able to generate an extra $10,000 a month for a restaurant, we were keeping about $2,000 a month of those sales, which, you know, was significantly more than $99 a month per location. And then as the numbers started to deteriorate over the years, it became, you know, not as exciting as that. But those are the two various business models for the two segments of the business. What was the personal feeling of leaving an established family business and starting something yourself? It was exhilarating, scary, crazy. Part of me felt like, why am I leaving this? You know, why am I running away from this thing? But I really felt like that's what my heart wanted to do, and I love building and creating and the whole entrepreneurial journey. And I kind of felt like, you know, I would learn so much through that experience that there was really nothing to lose, even if it didn't work out in the end. Like, I would learn a lot through this experience, and it would help me grow as an entrepreneur and be able to take a fresh look and approach at the family business later in life, when it makes sense. So I don't know, a lot of feelings leaving the family business. And I think, you know, for my dad at first, he was like, what are you doing? You know, this thing is set up for you to take it on. And once he saw what was happening with the insane growth that we were experiencing and lots of restaurants signing up, I think he was very excited about it. And I even found him, you know, when he was going out to eat for dinner, he was constantly selling the restaurant on using our system and our software. So I think he had a lot of fun, you know, watching it unfold as well. Do we have liability insurance in the early years? We had all sorts of insurance throughout the whole journey. I think, you know, when you're starting a tech company and taking on outside capital, it's really important to make sure you have everything from D&O to E&O to, you know, just general insurances to cover all different issues that could happen. And we had to deal with, you know, everything from like litigation matters to IP matters to just, you know, all sorts of things. So it's important to have a strong legal counsel, and eventually we even had general counsel to handle the amount of stuff that we were, you know, getting into and working with. So there's, you know, it's good to have protection and all of your things buttoned up and lined up from day one as you're jumping into this. I find you know, as you're moving fast and breaking things and in uncharted territories and starting, you know, a business in a category that's never been done before, there's just not a lot of rules and regulations to fit within. And so you have to kind of create your own ways of doing things. And like, there's no template agreements that we were able to use with our restaurants. We had to make those from scratch. Like, there's just a lot of potential room for error and things that can go wrong. So it's always good to dot your I's and cross your T's, if you will. I think that's all the questions that were in the Q&A.
But we're back to the webinar. The question is the mac and cheese concept still working for Canter's?
We are still doing the grilled cheese concept at Canter's. If you go online and you live anywhere, if you live within about 4 miles delivery radius of Canter's Deli in LA, and you open up Postmates or DoorDash or UberEATS or any of these apps, if you look up Grilled Cheese Heaven, you will still see this brand. When you order it, it comes out of a little printer in the kitchen of Canter's, and the food is being made out of the restaurant still today. And it's adding about, you know, $100,000 to $200,000 a year of incremental sales to the family business still today. And it still is for many other restaurants as well.
So we're back at Canter's, and Alex and I have been talking a lot over the last 6 months, sharing stories. And certainly my favorite story for him, and I'm going to ask him to maybe quasi end on this, is to tell us about Christmas Day at Canter's restaurant.
Yeah, so Christmas Day is usually a day that businesses close for a holiday, but for Canter's, it is by far the busiest day of the year. It has become a tradition in Los Angeles that many families go to Canter's Deli on Christmas, which is very contradictory since it's a Jewish deli. But because it's one of the only restaurants that stays open, besides maybe some Chinese restaurants, it has become a family tradition for many Angelinos, and it's all hands on deck every year for Christmas. We bring as many staff members back as we can to help with the chaos. There's usually a line out the door around the corner the entire day, and we do more sales that day than any other day by far. Growing up, Christmas was a tradition where we were all working. Even family members that are not involved in the restaurant are there plating pickles or giving chocolate chip arugula to customers in line, thanking them for their patience. And it is total chaos on that day. I don't recommend going on Christmas Day. If it's your first time, I'd recommend any other day of the year. But it is quite a scene and something to be something to see, because it's really amazing how everyone steps up that day. And sometimes we'll bring back people who were fired 10 years ago, 20 years ago, just to help with the all hands on deck situation. And even my wife and people who are surrounded in the Canter family are always available and there to help as much as we can. So
Alex, thank you. And in many ways, that summarizes what family business is. It's like it's a business, and then it's family, and it's just one big mess, for lack of better words. Alex, thank you for joining us. I love your story. I love hearing just the whole journey. I think it's fabulous and fascinating. I want to also thank our Family Business Center partners, who, as I said, I believe are the unsung heroes, the family business community. And I want to thank everyone for attending our first Family Business Center webinar. Hopefully, you enjoyed it as much as we enjoyed bringing it to you. And we have a lot more fun, interesting stuff coming up in the future. And I hope you'll be part of our family business community. Thanks a lot.
thank you everyone for joining. Thank you, Alan, for hosting this and bringing this community together. I think it's awesome, and really, really grateful and appreciative that there are resources like this.
Great. Have a good day, all.